Hey everyone, this is a trader investor. In this video I'm going to do something a little different. I'm going to show you a technique that I use that builds upon something that I have talked about in the past. Nothing new, but this technique is what I use for trades after earnings in big names. And today we'll look at three examples. We'll look at Tesla, we'll look at Netflix, and we'll look at Amazon. Amazon just had its release after the market closed earlier today. And how do I set up myself for trade in Amazon tomorrow or the day after? This is what I want to talk about today. So let's start with Tesla. The first thing that I do before earning, the earning date was on the 27th. So before earning, this is very critical that I do this before earning. I draw out my hourly order blocks. This is why I said it builds upon things that I have talked about in the past. Now, normally I would draw out order blocks on the daily time frame, but because this is a short-term play on earnings and taking advantage of movements after earnings, those movements are big, up or down, I don't know which way, but those movements are big. I don't gamble. So by I don't gamble means I don't take a position on the 26th. Tesla options are not cheap. And when you have volatility built into those options because of earnings, when you have a binary event, those option prices are jacked up. So I don't gamble. I could take a position to the downside or to the upside, not knowing which way it's going to go. And if I am wrong, I wipe out the full 100% of that position. So because these are not cheap options, I'm not gambling. So what I do is I draw out my hourly order blocks prior to the earning. So you could do it 15 minutes before earning, that doesn't matter, but you have to do this before earning, and you have to take this setup after earnings is released and the next trading day is open. So what I mean by next trading day is if most of these tech companies report after market, so not much to worry about. So the next trading opportunity is the following day. But sometimes they report before market open. And in that case, then the setup is valid as soon as the market is open. So it could be that same day. But what you want is the first time cash market, equity cash market is open after earning. That's when the setup starts to build. So you have your order block identified. Some other ones were starting to appear, but they were already taken care of, meaning mitigated. So everything that is mitigated, I'm not concerned with. Based on where price is, I want to look at any order block that hasn't been mitigated, that is above me and below me. And in this case, the last one was this order block here, but that was also mitigated. And up here, it was so high that I didn't feel like it was a good order block here. So for a down move, this was my order block all the way up here. So usually when I see this price came down, price reverses back into that box and price continues to go down, I don't consider this an order block. I consider this is already mitigated. This is what I consider. That's why I don't draw it, and I just drew it to show you why I took it out, and then I take it out. So on the 26th, when I see this setup, what it tells me is on the upside, nothing is stopping me from continuing to have a very good upside move. Nothing as a headwind, nothing blocking me, with the exception of maybe these highs that could act as resistance. But if we have Tesla earning, I'm expecting price to do this or to do this, right? This is my expectation. So I'm not too concerned about this area. Now, I just briefly, I can say if the earning was good and it had gapped up somewhere here and price tested these as support, I would feel very comfortable entering a position in this area. But right now, that's not what this discussion is about. What this discussion is about is how do we then take advantage of these order blocks and what do they really mean for us. So you identify the order block. Step number 2 is on the day of trading, decide which way the market is going. Because I draw it on the hourly, I want to go down to the 15 minutes and to show you something, I will even go down to a lower time frame. Let's go to a 5-minute time frame. I just want to show you something that has happened. So here on a lower time frame, you can say 15 minutes, first 5-minute breach, and Tesla wants to close this gap. You can make that assumption. As an assumption, it's not a bad assumption. But as a trade, the reason I don't like this trade from that perspective is because I have identified an order block. And what that tells me is price could test this order block. It could test it as deep or as shallow as it wants to. I have no idea. So immediately, as soon as price enters this order block, I have no long entry yet. I have no long entry. I am patiently waiting. Now, if price gives you break of structure, you can absolutely enter and close this gap. But if I don't see a break of structure, for me, structure is most critical. Structure, area of value. This is an area of value. Structure is broken. There's no upside. There's no sideways. The structure is broken to the downside. Unless I see a reversal of that downside broken to the upside, there's no upside entry. That's why it's irrelevant what time frame you're trading. You're not in a hurry to enter this trade because you are not in this order block. Now, think about this as an order block. If you say the last down move before price started to make higher highs, you can even look at this 5-minute or 10 minutes order block and see that this almost the full order block was mitigated, right? So as you start looking at order blocks, the reason why as soon as it enters, I'm not in a hurry to take a position is because I don't know on which time frame, which order block they want to cover. So don't be in a hurry and wait for break of structure. If we get a break of structure, we enter. So let's get out of this time frame, because what's important is now that we have seen on the 15 minutes, we see price enter that order block, price got rejected. This is my sign for me that price is going to continue to go down. And even if you want to wait slightly, wait for first half hour or so, let price give you a pullback. A pullback never went into that order block. A pullback never going into that order block, and you see a break of this trend line, boom, you enter. This was a beautiful day for put setup. If you have missed this, you're in for a treat, because we're gonna go into Amazon, which released earnings, and we'll look at Amazon, and I'm gonna help you set up for nice opportunities tomorrow. I'm not saying which way. I'm not suggesting or recommending an entry. I'm just going to show you potential setups. And it's up to you to validate those setups, do your due diligence, validate those setups, and do what's necessary. So finishing up on Tesla, you can even say at the break of this, I'm entering. That next day gave you a break of that. And once you have that, price has moved significantly. From this break to these lows here, that's a very, very nice move, right? $27 move from 700 area to 670, right? That's a $27 move. That's a very nice move. And on a Tesla options, after earnings, the volatility is crushed, so you get the standard price. I mean, even then, at 700 stock company, the options are not cheap. They're, upwards of, depending on what strike price and what expiration you use, upwards of $15 to $25 per contract. So those are not cheap, but this is a good payday. It's a very good payday if you were patient and entered your position based on what technically the charts tell you, and you did not rush to get in. That's the critical part. Just because we got into an order block, that doesn't mean it's time to get in. A lot of people got trapped, right? Looking at the 1 minute chart, many people got trapped because when we go back here, here's where the trap happened. And being trapped is something you want to watch out for, because what they saw was, wow, price drove down, and it is reversing. It's time to get in. It looks very promising. I broke the high of the 15-minute bar. It's promising. Let me get in. That was a trap because you have this order block. Unless you have identified this order block, you would not know what to do with this setup. Very critical. Absolutely critical. So let's go into Netflix. Netflix, something similar. Let's go to hourly. And what I have done is, right before earning, I started to identify order blocks. And up here there was one order block kind of mitigated, down here mitigated, anything up here was mitigated. This one, because of the way I look at my order blocks, and as soon as I see from my starting point to here, it's been taken care of. That's why I don't draw it, I take it out. So I have these other order blocks identified here, these 3 order blocks identified, and nothing to the upside identified. So again, to the upside, I'm expecting, if we have an explosive move, I'm just going to let structure tell me where is a good area of support to bounce from to enter. So the entry is not the minute after earnings the market is open and entering because I'm rushing to enter. That's not an entry. The entry is let the earnings come out, let the setup tell me what the setup wants to do, boom, I enter, right? That's the real entry. So here, after earnings, price got down significantly. It skipped through one order block and it went to the next order block. So literally this order block is taken care of. It's taken care of in huge profit. Any institution that was short here, that held their short position, got a good payday here. They could get out right at the open. They could wait it out. They could get out when price started to reverse. but they have a good payday. So this order block is mitigated with a nice payday. Not just mitigated, also paid nicely. This next order block, same thing. Mitigated, paid. So now what do? We see this order block, so we can either go to a 15-minute chart and look for a sign of weakness. So structure is broken to the downside. So I don't need to see a structure breaking to the downside. What I want to see is once I start to break this trend line, I'm entering a position to the downside. But to the upside, what I want to see is when I see price has formed some low, has formed some high, I want to see price then continue to drive up and make higher lows for me to enter on the long side. Otherwise, this is still a short side play, still to the put. And for me, when I start to see these rallies, the reason why I want to break this, because my next target is the next order block unless structure breaks. Until structure breaks, next order block is my target. So this is giving me another opportunity. It's not a huge movement, but this gives me to the top of that order block. It's a $6 move. So this gives me significant move. That's why I'm happy to enter this kind of trade. And until I see break of structure, Netflix is not resuming. I am not seeing any break of structure. What I am seeing is heavy consolidation. Heavy consolidation. Now this consolidation, is it redistribution? Because if we assume somewhere up here distribution happens, this is redistribution. Or is it accumulation? A lot of times the strong names, when we get a gap down, it's an opportunity for institutions to grab the stock for cheap. So it could be an accumulation. But how do I validate accumulation? I get a terminal shakeout. I get a reversal. I never test the terminal shakeout. I break the highs of that consolidation area, and I continue to do this. So these are areas that confirm it's a good entry. So entry 1 is a good entry here. Entry 2 is at the break here. Entry 3 is at the test here. And even if you want to take a chance and say, hey, I see this terminal shakeout and it has reversed, and a few bars up, I'm entering somewhere here. It's valid, but know that you have a higher probability of being stopped out, because sometimes we don't know the exact terminal shakeout. So until they show us this structure, until they show us this is broken and this is now tested as support, we don't know that terminal shakeout has happened. But what I see in Netflix is exactly an accumulation or a distribution, whichever way, let the charts tell us. If it's a distribution, then price is going to give us a UTAD, meaning upthrust after distribution, and price is going to break, and price never goes above to that area again. So that's what we will see if this is a redistribution. So both Tesla and Netflix, you've seen how they're set up. Now that we have gone through the theory behind it, Amazon just released earnings. So what do we do with Amazon? First order of business, we go to our hourly chart and let's identify a couple of order blocks. So I see one here. Anything that has not mitigated, we are at all-time high. So if price goes up, which I believe it did, we'll go quickly to the extended hours. This is what you see here in blue is aftermarket. What you see in green is pre-market. So in aftermarket, price has already exceeded significantly above and making, you know, new highs and higher highs. So, but now for now, the way we set up is we have this order blocks, and you would have done this before markets closed today. You would have identified these areas before markets closed today. And why do you need to identify a couple of them? Because like I showed you in the Netflix example, it sliced through 2 order blocks. So you don't know how far this earning is going to take this price. You don't know how much the institutions are going to use the earning as an excuse to take the price down, or they're happy to just keep driving the price up. So because we don't know, it's good to identify a couple of order blocks. And now when the markets open, even with the pre-market or post-market right after earning price showing us a strong move up, it could still come down. Something could happen overnight and the markets could stay, if you look at the NQ futures, right, down at about 0.4%, right, that could continue to drive further and further down. Because we don't know that, we're still waiting, we're still prepared. So whatever price does tomorrow with Amazon, if it continues this upward movement and it tests some areas here and it gives you an opportunity here, fantastic. If we take out this last, if it starts here but it starts to drive down, it could give you an opportunity to drive all the way down from 34.70 to the 34.20 area. That's not really a big deal for a stock of $3,000. So this could happen, and when you see a break of structure of that down move, it's time to enter. So we're setting this up so you can monitor Amazon the next 2 to 3 days, see which side it wants to play, and participate. You can participate by buying the comments. You can participate with options depending on your account size. These are going to be pretty expensive, $40 per contract, $60, $70 per contract options depending on expiration dates. And this strategy is best used for contracts that expire at least 10 days or more, because you want to give it time. Once you see that structure confirmed, you want to give it time to work out itself, because if it goes into a consolidation, it's going to eat away at your premium. So you don't want to do that. You want to give it a little bit of time. But this is how we wait. This is how we prepare for these big moves. I always trade SPY, you know that. But earnings is a great opportunity. Like once a quarter, find 2 to 3 stocks that could have explosive moves and take advantage of those moves as they settle down or they continue that move up. So look for the earning, look for the setups, structure, area of value, execute, save. If you do these 3 in any market, you're golden. So here you're set up with Amazon, and if there's any other stock you want me to look at, any other earnings you want me to look at, let me know in the chat, and I will come back and revisit that area. But for now, I hope this has helped you, and I'm believing that this is going to prepare you for becoming a better trader and analyzing earnings and finding a way to enter earnings without taking a gamble on the earnings before the earnings come out. So please do not gamble. I never recommend to gamble. If you gamble, go to the casino, throw away your money, and just come home. All right, everyone. Don't forget to like this video. Always I'll mention this. The likes is like my food. That's what motivates me to keep going. So please do that for me. And I will come back in the morning, and we will take care of our normal routine. SPYs, Qs, IWM, diamonds. They had a nice V reversal today. Will that upward movement continue? Will we end April in the green and as a strong green? How are we going to end April? That's what we'll look at tomorrow. All right, everyone. Take care and have a fantastic rest of your evening, day.